or if he is so close buddy that you want to reward him because of him he has created that business for you and you take him at par, perfectly fine. I get one more investor and then I take him at par. Now what happens? He contributes 10,000 out here, then what happens? It is 50,000, then 3 partners, what is your holding? 50,000 divided by 3, that is all. Of course you lose some part of it, everybody loses. Keep capital gains aside, sir. Capital gains is for you, capital gains is different. Capital gains is for liquidating a particular asset. Let us not bring capital gains at all now, do not worry about it. We will address it by the end of the class.
So what is the company for this 12,000?
Huh?
Just a reference.
Premium, term is premium.
Why can't it be 16,000?
Huh? You can. If somebody is prepared to pay, why 60? 16, it can be 60. No problem. You have to find a fellow who is going to invest in you. Who has, see, supposing I start a company and I say I am going to charge premium on my share, I do not think anybody will invest.
But still nowadays there is some formula for
There was a formula is gone. There was what is called as, before 1993-92, there was what is called as a controller of capital issues who used to have a formula. 92, that formula was abolished, that is controller of capital issues abolished. Companies were free to price. You can, as long as you are able to find an investor. That is what we normally say is, when is the bearish run in the market, when is the bullish run in the market, right? If there is a bearish run if there is a bullish run in the market and lot of investors, lot of companies, good companies are coming out with the public issue, as a bad company, I will also sneak in my issue at a premium. And why will you invest? He is making money in the market, that is all I know. So I will just go and blindly pick up an application and put my money and burn my fingers. That is how it operates. If every investor does his homework well in the market, there will be no place for scams. Agreed? We move on. So far what we covered, today, we covered different forms of capital. Started with, I covered different forms of equity, preference and debt. We talked about that. I am just doing a quick recap. Then we talked about what is called as equity shares, how it is denominated, what is bonus shares, what is net worth, etc. Then we moved on from there and then we talked about the premium part of it, how is premium, what is premium, how is premium, roughly again. Will companies exactly use this formula and price that the premium? This is the basis, that is all I would say. This is the theoretical basis for that, beyond which you will sort of look at it. Then we look at what is called as profits and reserves and whatever money belongs to the equity holders, and that is what we call it as your different forms of reserves that basically occur or is there in your P&L out there. Now just pick up this, what have I done? Before, let us not even worry about solving it as of now. Everybody has got a copy, I think they must have made enough number of copies out there. Now in this particular case, what have I basically done out here? I have just given you list of transactions, a simple list of transactions that can happen in a company. What do you call it, I have not even given it date wise, etc. I have given you a simple list of transactions. About 25 transactions are there that can happen. Now what are we looking at it? Every transaction, as I said in the last class, will have to have an effect among the 4. I am going to use this board now for a minute, because he is going to use an Excel. What we talked about? We talked about assets, we talked about liabilities, we talked about income, we talked about what is called as income or revenue, we talk about expenditures. These are the 4. I am just going to keep these 4 on the board right there. There are only, for every transaction we will have to find a place. There will always be 2 sides to a transaction. That is what accountants will call it as double entry system. For every corresponding debit there is a corresponding credit, etc. Your accounting friends will tell you, but let us not even worry about it. There are 2 sides for every transaction, and every transaction, the 2 sides of the transaction will have to find a place in one of these 4, that is all, minimum 2. Let us take, so what I am trying to do, balance sheet, if I think increase the, font, they have to see, man, huh? What is, they have to see this, it is all such a low font, even I can't read it. और बड़ा करो, और थोड़ा, enough. Able to see last row, or else you have to move front, move up, move it up, move it up, other way, man. It's, yep, leave it there. Now, you see balance sheet as on 31st December, that is what is the finally we are going to arrive at a balance sheet as of 31st December. Whereas when you move to the profit and loss statement out here, move here, move the cursor here, you need a mouse, you keep the mouse also that side, right? Wait, yeah, you will have it, now you have it. When I say profit and loss statement for the period 1st January to 31st December. Now, move to the other side, move to the balance sheet part of it. Now, I am strictly not going to say 31st December as of now, I am going to say you are going to see a balance sheet at the end of every transaction, whereas P&L will remain for the period, for whatever period you are looking at. Whereas the balance sheet is what we call it as at the end of every transaction, just change it to balance sheet at the end of every transaction. So we are going to, every transaction that basically happens, will have to find a place in these two. Normally typical accountants will pass journal entry to ledger account to trial balance to trading account, etc. So finally what are they doing it? They are doing it step by step to basically arrive at and fit it out here, a consolidated part of it. So we will attack it directly, that is all, because that is for a typical 11th standard commerce 15-year-old kid. So now we have to catch up for the next 20 years of our learning, so we will start attacking directly out here. Very simple, let us look at the first statement out here. Pratik and Imran, two friends, incorporated Pran and Co, whatever is the company, name of the company, with each contributing to 6 lakh equity shares of 10 rupees each, fully paid as of 1st January 2018. Now what has happened out here in this particular case, go to this cell, D4, yeah. There are equity shares. What is the value, what is the number of equity shares that is there? That is, now this is balance sheet of the company. What is the number of equity shares? The number of equity shares in the company is 12 lakh, 6 plus 6. 6 lakh equity, 12 lakh equity shares at 10 rupees each. First write it there, man. First write there. 12 lakh equity share, lakh, English, lakh, okay, fine, no problem, go ahead. Equity shares at 10 rupees each, equity at 10 rupees each, at 10, that is it. Now this is not, this is, I think you have missed a 0, into 10, into 10, into 2, into 10, that is it. So what has happened? Equity shares has come into the company, equity plus liability, liability plus equity. Now what is happening? What is the second part of it? Net worth is there, net worth is there, net worth is created. Huh? There is no income, is it? Share is not an income. There is a cash which is there, moment they have contributed, what is happening to the company? They are not Imran and independent, Pratik and Imran, they are now what is called as a combined. Now they are looking at it from the point of view of the company. As far as the company is concerned, what is happening? There is a cash that is sitting, bank account, and go move to the current asset. I will tell you what are all these. Bank account, whatever is the balance out there, that is 6 plus 6, 12 lakhs into 10, 12 lakh into 10, but just multiply 12 lakh into 10, 1.2 crores. Okay, over, he has made it, okay, no problem. Right, now, so what has happened? If you look at the sources of fund is equal to my, is equal to the what I called as the funds what I basically own out there. Am I with you on this? So basically two parts of a transaction. What is the transaction? These two guys have contributed, Imran and Pratik have contributed into the business a capital of 6 lakhs each, 6 lakh shares of 10 rupees each. They have brought in, no premium, nothing, do not worry, it is a new company. So that money has come in. As far as the company is concerned, why am I writing liability plus equity? As far as the company is concerned, the company owes the money tomorrow, today, right today they decide to dissolve the company. The company owes the money back to these two guys who have contributed as capital. For the company, the bank, the money that is flown into the bank, the account is in the name of the company out there in the process. With you on this? Huh? Huh? Long term? It's basically there is no long term, liability is a long term what is called as a borrowing. In this case there is no long term, it is a lifelong, there is no long term here, there is no term attached to equity borrowing at all. It is what is called as it is a lifelong investment out there unless the company decides to buy back. On this clear? Now let us read the second statement out there. Additionally, they also appointed themselves as managers in the business at a nominal salary of 1 lakh each, 1 lakh each, 1 lakh each per month. I have not mentioned per month, you can add per month. Annual salary, 1 lakh annual salary, I am sorry. Additionally, they appointed themselves managers in the business at an annual salary, I am sorry, annual salary of 1 lakh. So that means it is an annual salary of 1 lakh. So what is it? What happens now? Sir, they have just appointed, it is the 1st of January, let us not worry about it now, let us worry about it when we close it. As of today they are appointed, maybe they might fight and leave today also, Imran and Pratik might, because Pratik is enthusiastic, Imran is balanced. There, that is provided they perform their activity, with every passing day the company becomes liable. Third, on the first day of incorporation, the company purchased a building worth 95 lakhs on a mortgage from a financial institution. In this particular case, it becomes a transaction, it finds a place in the profit and loss statement if and only if a transaction has taken place. In this particular case, what has happened? They have appointed, nobody has basically worked, that is the transaction has not happened. Until the transaction takes place, there will, even if 1 day is over, then there is a transaction, then that will find a place in basically what we call it as the P&L statement. First, what has happened? The company has purchased a building. So what has happened to you? There is an asset that is created which is worth 95 lakhs. So what happens? Go to the fixed asset out here, you love fixed asset. Pratik, chartered accountants cannot commit some mistakes like this, huh? Building, 95 lakhs. Now eliminate the zeros, decimals out there afterwards. Okay, Lord, no problem, do it later. Now what is happening? There is a mortgage. Mortgage means what? You ought to pay. There is a liability. You have created a liability. So what is happening? Long term liability, that is mortgage. 95 lakhs out there. Now having mortgage, yeah, just write mortgage, no problem, just write mortgage. 95 lakhs. Eliminate this decimals here. Once again, once more. That's it. Thank you. That's great. Now, please understand, source of fund is a loan. Utilization of fund is a building out there. Source of fund is a loan. Utilization of fund is a building out there. There is a source of fund. Source of fund is this 1.2 crore plus 95 lakhs. Utilization is this 95 lakhs plus 1.2 crore, which is sitting in your bank account out there. Now 95% of that 1.2 crore is in the current account. Rest of it is in the form of cash out there. Rest of it, write it as cash. Don't do that because there will be problem afterwards, because that cell will also change, no? that cell will also change, current account will also change, no, it will be 95% of that 1.2 crore. Don't do it right there, 95, 1.2 crore, don't have, it's okay. Okay, that will be 95% of it, right? Yeah. Cash is 95%, 5% per cash, current account is 95.
So 100 for
I'll
this.
just do it. I'll just do it. Just do one thing. Just do this. Just okay. What do you call it as? Just do that. 1.2 crore. How many zeros? Am I okay with the zeros? Into 0.95. That is it. And here 1.2 crore into 0.05. No, that is 1 0 missing out here. So just add a 0 there on top of it. Just add a 0 on top of it there. Yeah. Am I okay? I think I'm okay. I think I'm okay, right? Yeah. Why should it be decreased? Why should, see, I have purchased for 95 lakhs. What have I purchased? I have purchased a building. What do I own? I own that is what you see on the asset side. It is a very one sec. Forget about account. I have bought a building on loan. Who owns the building? Company owns the building. Is it asset for me? Agreed. Understood that. Second part of it, how have I bought it? I have bought it by taking a loan. So am I liable to pay the loan? What is the amount I am liable to pay? 95 lakhs. So that is what is mortgage. Mortgage is nothing but you pledge it and then buy it. The building is pledged to the loan provider. That's all. That is all mortgage is. You don't need to have funds. If you have every fund and operate business, you will never operate business. You don't have funds. But who owns the building? Sir, let us take an example, sir. Do you have a car? How did you buy? Loan. Which company? Which bank? ICICI. Registered on your name? Car is registered on your name? Can you sell it? You can. You can sell it. Who owns it? You own it. But are you also paying the loan? Yes, that is a different, this is different. Car you own. Loan you have to pay. Same thing. Building I own. Loan I have to pay. Agreed, sir?
Mortgage is 95 lakhs.
No.
So the cost of the mortgage is more.
Yes, sir. I have actually the cost of mortgage. See, in this case, when I said 95 lakhs, it is including all costs, mortgage costs, legal costs, they were landed cost for me, sir. I have not kept it separately.
That's not the value of the building.
That is the value of the building. Value of the building is landing cost. When you buy a car, what is the price? Ex factory price, ex showroom price, with RTO charges, with number plate charges, with basic accessories, or without all this. At what stage? When the dabba is made or when engine is fixed, what is the value?
But if I want to sell that building, it won't fetch me 95 lakhs.
It may not fetch you 95 lakhs. Like today, if you want to sell it, it may not fetch you. But what is the cost of purchase? That is cost of purchase or the value, market value, whichever is lower. Then I have not basically done what is called as a simple evaluation of it. So normally what we talk about is market value in the purchase price out there. What is that concept you were talking about yesterday? Not conservative. Historical cost. I am sorry, I missed out that yesterday. Historical cost concept. What we do is we look at the historical cost in this particular case. The earlier what? We based on the historical cost, then next is what is called as conservatism combination. With you? Yes ma'am? Yes Malika? Moment I called her name, it fell off. No problem, don't worry. Want me? Yes, of course, we will worry about the interest.
Won't that become a liability?
Hey, yeah, as of today it's not no interest, no. Maybe I might win a lottery today and clear off that mortgage. When is interest due? After one day. It will reflect both in the profit and loss if I pay. If I don't pay, it will reflect in the profit and loss as well as in the balance sheet also. We will come to all that. We are just in third transaction, ma'am. There are 25. I will add 5 more. we will do it, do not worry. So far so clear, sir? Mortgage? The company issued 8%, 200,000 debentures or 2 lakh debentures, 8% debentures of 100 each on 1st of January, and all the debentures were fully subscribed and paid, interest payable half yearly, all that I have indicated. 3 more minutes, because he is signaling from that keyhole. So, I think there is 3 more minutes, let me finish this. 8% debentures, 200,000 debentures. So, what has the company done? The company has issued 8% debentures, 200,000, mention 200,000 debentures also, my dear, here, 2 lakh. If you are finding it difficult, you sit here, no problem, okay. No, 2 more notes, no problem. So, what is happening? So, 2 lakhs out there into 100, just keep the cursor on, keep your, yeah, on that. That is what is called as 2 lakhs into 100, mention 2 lakh debentures out here, 8% debentures, 8% debentures 2 lakh. Mention 2 lakh there. Mention 2 lakh, how many debentures? Right, close the bracket. Debentures mentioned, man, already, just close the bracket, you do not need to write again, just close it. Pratik, debenture, 8% debenture, 2 lakh debenture, what is this? 8% debenture, bracket 2 lakhs is fine, knock out that debenture there. So, do not worry, this is the first time Pratik is trying to bring my TS, so he will get trained, and he is also owner of the company, yeah. Now, what is happening? Moment you have these debentures, you are liable to pay the interest as well as principal. So, what is happening to you? There is something, liability is one part of it that we have created. What is the asset? There is money that is coming in, bank, there is a bank balance also increases by so much. Interest you are payable, Malika, yes, interest payable, when? Half yearly, we will worry about it on June 30th, as of today we do not need to worry. This is, we are still on Jan 1st, let us enjoy the new year. So, we are still, when we come to June 30th, let us worry about interest. So, what is happening? There is a source of fund, go down, sir, just move down. If you are enough, your balance sheet out there, total, if you look at, why is it 2,15,000 there, you have not entered cash? Bank balance, current account. Current account has to increase, pa. 2 lakh debentures, no? Increase it. Okay, beautiful. Now what happens? Your sources of fund is whatever 4.15 crore, your utilization of fund is 4.15 crore. We are not even touched the P&L out there. Am I with you on this?